Okay, everybody, here we go. It's me, Gregory Mannarino. Wednesday, January 3rd, 2024. This is my pre-market report. Let's start off with this. The bond market continues to sell off. It's not rattling me at all. I'm going to be honest with you. Generally, this would be a cause for concern, but not right now because, honestly, we're going to hear from the Federal Reserve today. The Federal Reserve is going to come out with their minutes from their last freaking meeting, and the market right now is just so fixated on everything the Fed says. Why? I mean, look, people, let's just lay it out here. Without Federal Reserve support, this market would crash in a nanosecond. There's nothing but the promise of easy money being poured into this market moving forward that's keeping it afloat. That's it. Nothing matters anymore. I mean, nothing matters anymore besides that. So with that said, it's kind of easy to understand why there's this element of fear here in the market. Why bonds are selling off. Right now, the 10-year yield is just under 4%, 3.78. Okay, it's not going to last. No, it's just not going to last. Is it possible we may bounce above 4%? It's possible, depending what comes out of the mouth of the Federal Reserve at their minutes today. Look, I am so absolutely confident that the Federal Reserve is going to be cutting rates this year that I can't overstress that to you. Central banks are going to coordinate their action to continue to foster the illusion of liquidity here. Liquidity is drying up around the world, and I'm not the only guy saying it anymore. I may have been the first or one of the first, but now everyone is jumping on the bandwagon here. Liquidity. The whole system. Look, you get this if you follow this blog more than anybody else, but understanding the current central bank run debt-based economic model, you realize that it operates in a perpetual vacuum, a perpetual state of illiquidity, and in order to function, they must coordinate with our so-called policymakers to pull cash into the now, and for now, it means expanding war, period. No other endeavor on the planet, you know what I'm going to tell you, generates the need for more borrowed dollars than war. Again, this is why the founding fathers of this nation here wanted a commodity-backed system. They believed that would prevent war. Well, that's all gone now. We do not have that. We have this so may it be system by decree, fiat system. It just is. This is real money now, according to central bankers. No, it isn't. But they've really convinced people that it is real money, and that's a shame, honestly. And you know the story. Our policymakers, they don't want you in gold. They don't want you in silver. They definitely don't want you in cryptocurrencies. They want you in Federal Reserve notes. So that should tell you something right there. Anyway, just what's going on here in the debt market should not alarm anyone. This is not the beginning of a meltdown or anything. Stock futures are under pressure right now. Again, because debt market is selling off. And this will probably hit tech again like it did yesterday. But it's not going to last. There's no way this is going to last. No. I can't imagine a single scenario, even one, where this is going to last. So this means opportunity for you, for me. If you're one of my lions out here, let me tell you what I'm going to do. I'm going to be buying this market right at the open. I am adding to my long positions right at the open. Every time this market drops, I'm going to be buying more of this market, period. Moving forward for as far as the eye can see, because again, there's so many factors involved here. Understanding that global debt is going to hyper balloon here, and that's not only is that eventually going to play out to be massively bullish for commodities, but it's going to maintain the risk on environment right now. easy money, suppressed rates, massive government spending here, hyper-ballooning the debt, and this is where we're going here. All it's going to create is a nightmare scenario it already is. This is a nightmare scenario on an unprecedented scale. But this is going to play out to be a lot worse moving forward because, again, look, you have to realize what this is building up to. Eventually, this is going to lead to a meltdown beyond anyone's wildest dreams. And central banks together coordinating to continue to inflate, fulfill their end game here, create distortions across the spectrum of asset classes, eventually going to lead to all of this normalizing at a time of their own choosing. You understand? And then again, a meltdown of the debt market, which is going to be a nightmare on an unprecedented scale. You're going to have a rate spike, pressure on the stock markets. Cash is just going to move into commodities, cryptocurrencies, other things as well. I've covered this a million freaking times, but that's how it's going to work. But again, this is a presidential selection cycle. They're going to prop up the market, and I want to be long. I want to be long this market. I can't stress this another way to all of you, and period. The end. Now, covering some of the economic news today. What do we know, you and me? The worse the economy gets, the more likely it is the Fed's going to pour even more easy money into this market. So credit card defaults are continuing unabated. In fact, they're getting worse, just as you and I predicted they would. Let me say this as well. Loan defaults across the board, forget about just credit card loan defaults, are going to get a lot worse moving forward here. This is a mechanism to create dependency on the current system. You all know that. And just to I just put a couple of stars next to this one because this is the key. Without Fed support, the stock market would crash overnight. It's just easy money and the promise of more. And more war, of course, that's going to prop up this market here. You can't make it up if you even try to. So what's the takeaway from today's video right now this morning here is the debt market sell-off is continuing. The market is rattled. The market is getting rattled a little bit. Started yesterday because it wants to hear what's going to come out of the mouth of the one entity that is running the entire show. Not only have central banks become the one world government, but again, they have a stranglehold on the economy, a stranglehold on the financial markets, the financial system. They run it all. They run it all. They even control the flow of information. That's a fact. Don't just take my word for this. I mean, if you control the money supply, you control it all. And that's what they do. And they allow us to know what they want us to know. And they're pulling society in any direction that they want to pull this in, people. And unfortunately, it's going to lead up to a moment in time that people aren't ready for. You are. Betting against the debt, becoming your own central bank, staying long the market for now, understanding the liquidity crisis that we are in. This is a full-blown, full-on liquidity crisis, but you wouldn't know it. And the backbone of this, I really believe what I'm about to tell you, is to keep the system going. They're going to expand war. They're going to kill millions of people. That's what they're going to do. And, this all plays into exactly what you and I have been talking about, a massive reduction in the global population, more modes of control moving forward. I mean, it's all here. All the stuff you and I have been covering for like over 10 freaking years, people, well, here it is. It's in your face. And with regard to the economy, we haven't seen anything yet. With regard to the markets, record high. It's coming. Period. I don't know another way to put this, people, but you already get it. You understand the situation here. Going back to the markets, stock futures are lower. 10-year yield, as I said, 3.97 last time I looked at it. Dollar a little stronger on a relative strength basis. Cryptocurrency is getting hammered this morning. What did I tell you at the end of last year? Expect extreme, that was my word, extreme volatility when it comes to cryptocurrencies this year. I think we're going to get a roller coaster ride you're not going to believe, up and down with regard to cryptocurrencies. Gold and silver right now are also under some pressure. Crude oil is slightly higher, but there's a real game going on here with with crude oil, people, and this is OPEC. And we'll see how this plays out too, with more oil-producing nations now aligning themselves with the BRICS. It's going to lead to more war. Period. In the end, that's where this is going. Anyway, all right, look, this guy here loves you a lot, people. We will cover the Fed minutes later on the live stream, 4 or 5 p.m. Eastern time. I'm looking forward to that myself. Let's see how the market responds to this, okay? Keep your eyes on that 10-year yield today, specifically the 10-year yield today. Watch it. Let's see what happens. It's going to be interesting. That's all I have to say, all right? I will see you later. I hope you got something out of this video. Please get it out there. Please share it. Those thumbs up are extremely valuable. And thank you all for supporting my work. I greatly appreciate it. I'll see you later.